Hey there, Sheila Cahoon and Michael Hawker here. Mike is from Reliance Financial. He is my mortgage guy. You can see him on my website at milocalrealty.com/buyers. And today we are going to be talking about pre-approvals. Why do we want to talk about pre-approvals? Well, in today's market, especially now that we're getting into spring and summer, we are going to need to have buyers that are pre-approved before we even go and look at houses. Why do you need to do that? Well, the reason we need to get pre-approved before we look at houses is so we know what you are pre-approved for. So we're not wasting any time looking at houses that are not in your price range. And Mike's going to talk to us about the pre-approval process and what he does to make sure that you're set to purchase that home, that dream home of yours, without any issues whatsoever. So, without any further ado, Mike, let's get into it. So, the pre-approval
Hello.
process. Oh, you know what, Mike? Let's talk a little bit about you real quick. Where are you? Who's your broker? And just tell us a little bit about yourself.
I work for an independent broker, Reliance Financial Group. We're based, our office is in Troy, Michigan. I'm working from home right now. I go back and forth between the home office and the office in Troy. But we're a broker. The brokerage has been established for roughly 25 years. And if you are connected to me on any social media, you'll constantly see in my posts that I always put brokers are better. It's kind of a tagline, and there's we have a Facebook group of brokers across the country, and we do thoroughly believe that brokers are better because we have access to lots of lenders, lots of different programs. We're not just representative of one individual bank.
Yep.
So we have a lot of different ways to help virtually every type of borrower out there, and we take a lot of pride that we're able to do that. And, that's what we do. I've been in the mortgage business now for a little over 4 years and, spent 34 years in hospitality industry and constantly taking care of people and customer service all the way. And it just was a natural segue into the mortgage business and loving of numbers and just being able to help people better their financial well-being and get into homes and refinance homes and sell homes and all the lending that they need to get that done.
Awesome. Well, I can attest
Yeah.
to the brokers are better on the mortgage side because I've worked with some transactions where we've had banks that were the lenders, and some of them struggled to close, and some of them fell through. So I can attest that brokers are better. They get it done. They get it done quicker, and usually the pre-approvals that are done they get to the closing table, and they usually get to the closing table. At least the ones that I've had with you have gotten to the closing table a lot quicker. So,
Yeah, I've had quite a few borrowers that had financing set up with other lenders and some big banks that you've heard their names, you've seen them in commercials, and they get to the closing table sometimes 30, 60 days later to only find out that something wasn't properly vetted and the whole deal falls through.
yep,
I absolutely would not be able to sleep at night if I gave a half-ass pre-approval to somebody where I didn't do the diligence and I just maybe looked at a credit score. This person's good. I send a pre-approval out there and not worry about the fallout later. I couldn't do it. I
yeah.
couldn't sleep at night if that was the case. So we're going to talk a little bit about the process of what we do, kind of a high level overview of the things, because when people call for pre-approvals, one of the first things they say is, maybe it's their first time buying a home, or maybe they haven't bought a home in so long they forgot, and they're like, I just don't even know where to start. I don't know what the process is. How grueling is this going to be? And it's really not that hard of a process. So we're going to talk a little bit about that, and so people have an idea going in of what it takes to get a pre-approval. So they're when you fall in love, the problem is people fall in love with a home, they get all emotional, they see something online and they want to go now and they want to see it, and they don't even know yet if they're going to be able to purchase that home.
Correct.
Now they're all emotional, and then it's a Saturday night, and they're like, "Can you get me a pre-approval?" I can't tell
Right.
you how many pre-approvals I've done on Saturday nights and Sunday mornings.
Not for
It's
me. Not for me. Not for me, then.
no, not for you. Um, but you're not going to get that from a big bank. You can't call a bank at
Right.
Saturday at 6 o'clock at night and have somebody work on a pre-approval for you. I'm not saying every Saturday night it's going to happen, but most of the time I'll get it done for you.
Yeah, usually people are on the Friday, Saturday night, Sunday night type thing. They're online looking up houses on Zillow, and the
Right.
very first thing they should be doing is contacting a real estate agent that knows a good mortgage broker. So,
There you go.
so let's get into it. Let's talk about this pre-approval process and why it's so important. So, what's the first thing that people need to do in the pre-approval process? So somebody gives you a call. I give them your number and they give you a call. What is let's do that one over.
Are you gonna edit that out of the video?
That's gonna go into the bloopers.
I think it should stay.
All right, so let's get into it. So the pre-approval has to be done, and somebody called me. I gave them your name and your phone number. They're calling you right now. What is the first thing that they need to do?
So we'll have a brief conversation before anything. I like to get to know them, develop a little rapport, understand, what they're looking for, what their needs are, what their situation is, any concerns they might have about, some things on their credit. We'll just have a little bit of a light conversation up front. And then I send them an email template that basically tells them the basic things that I'll need to be able to put a proper pre-approval together. It's just a few steps. One of it is I'm going to have to verify income. And when people fill out, we'll have them fill out an online application. Really, it's a short questionnaire. It only takes about 10, 15 minutes. But a lot of times people calculate their income wrong. And it's really important. We can never go off what somebody tells us. Somebody will say, "Hey, I've got excellent credit. I make X amount of dollars. I really don't have that many debts that I can think of. What do I qualify for?" And I've had that conversation. I said, "Well, let's back up a little bit here." But I like to verify. I have to verify income, but I like to verify income because a lot of people will fill out an application and they'll just take what they gross on a paycheck. They're paid every 2 weeks, and they'll just multiply it by 2 and say, "Here's what I make per month." Well, that's not the correct way to calculate it. If you're paid every 2 weeks, you have 26 pay periods in a year. So you have to calculate that 2-week gross amount times 26 to turn it into an annual amount. And then you divide the annual amount by 12 months, because there's always outside of the 2 weeks and the 2 weeks, 28 days. Most months have 30 and 31 days. So there's a little bit of extra days of income. So the gross income will be a little bit higher than what they think they make. And
Gotcha.
you want to get them as much credit for as much income as possible. So the first step is verifying income and doing it properly off of current pay stubs and getting the last 2 years W-2s. And we're talking about your straightforward W-2 wage earner.
Yep.
Self-employed, just take some other documentations, tax returns. There's some more forms that are needed. But for this conversation today, we'll just talk about the most basic. We have to verify income, whether it's through tax returns, some P&Ls. Actually, they're lightening up on needing P&Ls right now.
And P&Ls are what?
Profit and loss statement. My apologies. Profit and loss statements. When COVID came along, they implemented some overlays, and they were requiring to the day P&L profit and loss statements because of COVID, and there was so much business loss. You might have had 2 great years on the tax returns the 2 years prior, but right now your business might have been suffering. So they wanted P&Ls to match up with your bank statements to prove that you still are generating X amount of business that your tax return said you were. They've lightened up on that now. Most businesses are back, and so really we're going off tax returns on self-employed. We do have other programs, bank statements and things like that, but for a common pre-approval, we have to verify income, and it typically starts with the W-2s and the pay stubs.
Gotcha. Awesome. So then once they've given you that documentation, what and so let's take a step back though, because I know that you send them an email and you request those documents. So once you receive all those documents, Do they automatically get pre-approved, or, what is the next step after they give you all the documentation and you've looked at it? And then
Yeah.
how long is the turnaround for that?
So there's more to it. Besides the income documents that they're going to send, they're going to send some bank statements, a couple months of bank statements, because if you're looking to purchase a home, then you should have some money saved up, because there's going to be down payment and there's going to be closing costs. Now people can use gift funds for down payments, and that, there's a lot more details around that. But basically, for the easiest situation, somebody may come in and say, I've saved up some money. I'm hoping to put 10 or 20% down. And a lot of people still think you have to put 10 or 20% down to purchase a home. You can get into a conventional mortgage for as little as 3% down. A lot of people don't know that. So
yeah, that's pretty good. I mean, and
yeah,
I like that you're sharing that, because there's going to be a lot of people that watch this video and go, wow, I didn't know that. So thanks for sharing that.
yeah. 3%, 3.5% on FHA mortgages. So, and again, the funds can be gifted. Can't be loans. You can't borrow the money for down payments, but they can be gifted. You get gift letters. But anyway, we need to verify with bank statements that if you save X amount of dollars and you tell somebody you want to put an offer on a home and I'm going to put X amount down and take out a mortgage for this amount, we have to verify you actually have the money in an account somewhere.
Gotcha.
So we have to paper trail that, and we have to ask the right questions, because I had a deal once where somebody else they were pre-approved through another mortgage person, and come to find out, we got close to closing. It was actually a home in my family that we sold, and whoever was doing their mortgage didn't verify where the down payment funds came from. Come to find out, the guy was a business owner, and he got a bunch of that PPE payment, payroll protection money from the government.
Yep.
After COVID, and he tried to use that as a down payment.
Yep.
To buy a house for himself. Can't do that.
No.
The mortgage broker didn't vet or verify where the money came from. And then in the final hour, we almost lost the entire deal, because now he had to come up with money from somewhere else,
right,
that he didn't have. So it's very important to vet cash reserves for down payment and closing costs. Another thing that we do is we have to pull credit. We have to pull legitimate credit and look at credit scores. I don't know if everybody knows, we pull from all three bureaus, Experian, TransUnion, and Equifax, and we're required to use the middle score. It's not an average, but it's the middle score of the three. So if you have a 780, a 710, and a 729, your score for your whole file is going to go off that 729.
Gotcha.
I recommend everybody download Credit Karma and Experian apps on their phones, because Credit Karma will give you an estimate. It is not exact, but it'll give you a good estimate of where your TransUnion and your Equifax scores are. And then the Experian app will give you roughly where your Experian score is. So it's a good way to figure out if you feel you're ready to have credit pulled, ready to get into the market of buying a home. But we're going to check those three credit scores. That's one of the next steps in the process. You give us your blessing to pull your credit. We're going to review that and make sure that your scores are in line and there isn't anything really detrimental on that credit history that's going to hurt things. Part of that is we have to add up liabilities. And this is one of the most important. If somebody wants to have an idea, if they're in a financial place to be able to get approved for a mortgage, and I'm sort of oversimplifying this, but if you stick to this rationale, we're going to pull your credit. We're going to add up your liabilities. Your liabilities are things that you pay out on a monthly basis. They're not your car insurance. It's not your cost, your DTE energy bill. It's not things like that, but it's actually debts or liabilities that you're paying back to a creditor. So it's going to be credit cards, student and government loans, car leases, other mortgages that you might have. You may own another home free and clear, but we still have to know. I have to ask that question to know if you own another home, because if you don't have a mortgage on it, that won't show up on your credit report, but we still have to include your homeowner's insurance and your property taxes as part of your liabilities for that other home that you don't have a payment on.
That makes sense.
A lot of people don't realize that.
Right.
So we have to know that you own another home. It may not show up on the credit report. And if we don't ask that question, and we come to find out later when title work is done and this home pops up under your name that you own it, the title companies are going to find that out. And then all of a sudden we find out you have a major nut to pay every month on taxes and insurance.
Right.
That
And
gets
then that
added
changes
in.
your loan to
It
income,
changed.
right?
Yes,
Or
exactly. It
debt
could
to
change
debt.
your,
I should say debt to income, right? That
yeah, your
changes your debt to income.
DTI or debt to income. It could
Yeah.
change it and ruin the entire deal.
Yeah.
Another
Right at the
point
end.
of
Right at the end,
right at
right?
the end. Right at the end. When
Yep.
yep,
And
right at the end when
that's when
title work
most
comes
deals
through.
fall apart for us
Right.
is right at the end, you know. So that's why that part is so very important, that you're honest and forthright with all the information when you're talking with a mortgage broker. So
Yeah.
yeah,
You
good
can't
information.
hide you can't hide that information.
No.
But just to give an idea, and I'm going to use easy numbers. The threshold for what you can afford, or I say your spending power, so to speak, on a conventional mortgage, they allow you to spend up to, give or take, and there's different situations where you can massage this a little bit, but it's pretty much 45% of your gross monthly income. So what that means, and for easy numbers, let's say you make $10,000 a month, and 45% of that is $4,500. All of your liabilities combined, and the liabilities that I mentioned, your credit cards, your car loans, your student loans, your any mortgage, other mortgages you might have, property taxes, insurance, all of it combined cannot exceed, using the minimum monthly payments of each of those. If you owe $10,000 on a credit card right now, if you owe 10,000 or 30,000 on a credit card, the only thing that matters is what they require you to pay as a minimum monthly payment.
Gotcha.
That's all that matters. So 10,000 or 30,000 doesn't really make that big of a difference. You're going to have a little bit higher minimum monthly payment, but basically we add up all the minimum monthly payments, and then we add in the potential new home. And if all of those combined and you're under 45% of your gross monthly income, you'll qualify. Now, I don't like to qualify people pushing it to 45% because you can be left house poor
Right.
at that level.
Right.
So
Exactly.
some people want to know, how much can I qualify for? Well, I may tell you, hey, you could qualify for a $400,000 mortgage, but you don't want a $400,000 mortgage because you don't want to be strapped in debt. So I tell them the most they could qualify for, but we scale that back to 35%, roughly in that range. And normally they'll say, here's the payment I'd be comfortable with. And I'll say, absolutely.
And I
You
think
could qualify for
the
that.
most important part is, people can be qualified. Like when I was looking for my house, oh, you're qualified up to 160,000. Well, that's fine
Yeah.
and dandy, but I can only afford like a house that's like 120, because that's what my mortgage would be, is what I could, do every month. So, what you're
Right.
qualified or pre-approved for and what you want is a monthly payment are really kind of two totally different things, right?
Yeah, absolutely. That's
So,
part of that upfront conversation that we have, finding out what you're comfortable with. Some people that are paying rent right now and they're dreaming of owning a home, and in many cases, they could be paying the same or more in rent than they'll actually pay to own a home.
right.
That happens quite often, but
Yep.
sometimes if it's going to be a little bit of a bump up, it's, how comfortable are you, and what other debts do you have? We don't like to max people out just to get them into the biggest home possible. Doesn't make any sense.
Right.
And it's just going to put them in a bad situation. So the calculations, just to oversimplify it, 40 up to 45% on a conventional mortgage. FHA can let you push it all the way up to 55%. So an FHA for certain situations, lower credit scores, FHA are those government loans that can really help some people that have struggled to get back on their feet. It's not a destination loan. It's more of a stepping stone or a milestone loan. But they allow a little bit higher debt to income, because typically FHA rates can be a little bit lower in most cases than conventional because they're government backed loans. But just numbers to stick by, 45 and 55% are the top ends. So we do the calculations, figure out where you're at debt to income, and then figure out what you could qualify for. So we're taking, just to summarize, how much money do you actually make? What are your credit scores? How much are all of your liabilities? What's your debt to income? Now, what will your debt to income be after you get into this potential new home? Verifying cash reserves to make, because you may be able to afford the payment within your debt to income for a $400,000 house, but what's 10% of that? $40,000. You may not have enough money for a down payment. You may not have enough for a 3% down payment. So sometimes, and closing costs, and closing costs, rule of thumb can be anywhere from 3 to 5% roughly of the purchase price of the home.
Right.
So, something to keep in mind as far as closing costs go.
Right.
But so it's a combination of all of those things, and making sure there's nothing derogatory on your credit report. The worst thing you can do is make a late payment on anything, because if you can't make your payment on time on a credit card that's asking you for $68 a month, what lender is going to give you $200,000 and feel like I think they'll be able to make their payment no problem?
Right.
Exactly. You cannot make late payments on anything. I can't stress that strong enough.
Yeah. And that's just a good rule of thumb for your credit in general. Like, anytime you want to have good credit, you should not be having any late payments.
Right.
The other thing is, I just lost my train of thought. Hold on.
Gonna edit that out of the video.
Hold on. All right. Oh, and the other thing is, the purchasing of big things prior to getting pre-approved. That's, I heard from many people that is a no-no. Like, you should not be making big purchases prior to getting pre-approved. What's your thought on that?
It's never a good idea. I mean, what it boils down to is if you needed a car and you had to go out and get a car, and it doesn't sway your debt to income to the point where you're pushing the limits, it would in most cases be okay. If you're going out there and there's memes and jokes all over. Buying what?
Buying a boat.
Buying a boat. Yeah. There's memes and jokes out there about, hey, you're in the mortgage process and you applied for a Kohl's credit card to save 15% on them jeans.
Right.
I started talking like Chris Rock. You just had to get that 15%. But just don't do it, especially when you're in process for a mortgage or a refinance. Don't have your credit pulled, because if we pre-approved you and your credit was here and everything was in place, and your credit score might have been sketchy, but it would get through. And then you go and apply for some things that you shouldn't be applying for, and now your credit score starts to take a hit. Once you get a house under contract and we submit the file, and your credit score and everything doesn't match what we talked about, and your debt to income's now out of whack, the whole deal could fall through.
Could fall apart.
And I gave you a good pre-approval, but you did something you shouldn't have done. And we have those conversations with clients. I can't make you not do it, but if you do it and the deal falls through, that's on the client.
Yes,
that's on the client. That's not on us.
Yeah, I mean, rule of thumb during your pre-approval process, and honestly, from before the pre-approval process until after you close on your home, don't make any big purchases. It's just really not worth it. If your home is your goal, then make that your goal, and don't be doing anything to jeopardize that, because in the end, if it falls through because you've done something like that, then the only one you can blame is yourself. So
right.
All right. What else is in the pre-approval process?
One other thing to mention about down payment is, if you have a 401k loan, you can actually take out a 401k loan. I'm not advising it. I'm not advising to do that. I'm just saying people have done that, where you can take a 401k loan for money for a down payment, but then all the documentation of that loan has to be submitted, because it's going to create a payment that comes out of your check to repay that 401k loan.
True.
And that becomes part of your debt to income. So,
it's kind of a catch-22, because you need it to help you, but then you're creating another payment.
And you're taking away the growth capabilities of your investment for retirement. So I'm certainly not advocating it. I'm just saying some people do that,
Correct.
but
I've seen
um,
people do that to help them out
yeah,
just a little bit. It wasn't very much. It was, I think, like 5,000 or something like that, just to help them out. But I have seen people do that. So
right, right.
awesome. So,
Um,
is there anything
so
else in the pre-approval process that people need to know about?
that's really the bulk of it. And then we'll do what we call running AUS finding automated underwriting system that we have, and we'll take everything and verify that it's accurate. Get the application, all the information on there. When the client fills it out online, that application doesn't, with a broker anyway, that application doesn't go directly to the lender and we see if you get approved or not. It comes to us, and then I go through. For example, you might have entered your income wrong. You may have entered. You may have not done some calculations on something correct. You may have not left out a address history if you've moved within the last couple of years. It's just a lot of things that we double check. So I make sure that the application's accurate. I make sure I have the documentation that matches everything that we're submitting, and we'll enter it into Run AUS. And basically, AUS is with Fannie and Freddie, and it'll come back and it'll say what we're hoping for is an approve eligible, and that basically means we're unless something crazy happens in the process, it basically means we're going to get you approval. This is a good pre-approval. We're going to get an
Awesome.
approval from the lender, whatever lender we go with.
Right.
And so we do the pre-approvals properly. So not only you can have confidence, I can sleep at night.
Yes,
I
I
can
agree.
sleep when I hand this thing over that this is a good pre-approval. And we're going to be able to close. We've closed. Sometimes we get appraisal waivers where sometimes an appraisal is not even needed on a home purchase. It just depends on the information in the systems and the network. But if we get an appraisal waiver, I've literally closed on a home purchase in 11 days.
Wow.
And all the agents are like, what do you mean you're ready to close? We need 30, 45 days. I'm
Oh,
like, well,
yeah.
sorry.
Agents and clients love that when that happens.
Yeah, it happens. Not all the time. Not
No.
promising it, but not all the time.
No.
But it
So
happens.
the pre-approvals, can you get them back to people the same day? Does it take 24 hours?
When it's as straightforward as the example I gave, if you're a W-2 wage earner and you're the perfect situation. You've been
Yeah.
working where you've been working for 5 years. You need 2 years of employment history, but you've been there for 5, 6, 10 years. Your income has been consistent. You're good with your money. You've got money in the bank. You don't have a lot of liabilities. Your debt to income, your credit score is high. I mean, when you have that situation, I can turn a pre-approval around to you. You get it to me in the morning. I'll have it to you by lunch.
Awesome.
It can happen very quickly.
Okay.
Sometimes there's on self-employed, we've turned self-employed ones around same day. Sometimes, it takes a day. Sometimes we need extra documentation based on what we see on those tax returns.
Yeah.
But
on average, you think it's like a 24-hour turnaround?
Oh yeah. Yeah.
Okay.
Yeah. On
All
average.
right.
Yeah, absolutely.
Awesome.
Yeah. We could talk all day just about self-employed pre-approvals and,
Yeah.
but it'll be another video because, we've challenged each other to do weekly videos. So we need to save some content.
Exactly. So, with that said, Mike, where can people find you?
You can find me on, you could go to rfgusa.com, and that's our company website for Reliance Financial. And then you can choose a loan officer up at the top, Michael Hawker, under the drop down. You can find me on Facebook. My Facebook page is Michael Hawker Reliance Financial Group. I'm on there. I'm on Google. My number is 248-379-4232. And
you can also find them on my website at mylocalrealty.com/buyers.
You can find me on your website. That's cool too.
All right. Well, Mike, thank you so much for providing this great value to the people who've watched this video. And if you need any help in the real estate market, contact me, Sheila Cahoon. Again, on mylocalrealty.com, or you can call me at 586-713-6464. Thank you again, Mike. It's been great talking with you. Any last thoughts?
Thanks for having me. No, just, I have a training background, so I really like to explain things. And I always like to say that it was always my job as a trainer to simplify complexity. And people find the mortgage industry, or not the industry, but the mortgage process to be very complex and scary. I love to teach and educate just like you do. You do a lot of teachings and education.
Yep.
So just call me, email me, find me, inbox me on Messenger, on Facebook. I'll get right back to my response time. I swear is impeccable and
It is.
quick.
It
and
is.
I
can
love to
attest.
just have conversations and explain the process and what to plan for. If I have somebody that doesn't qualify, if credit scores come in and middle 500s and there's just a lot of problems with late payments and things, I don't just say, send them an email, say, sorry, you're not approved. I send them a very detailed email, and I tell them the steps to take. What's your plan? We have a credit repair partner that can help turn things around in sometimes a very short period of time, and put them in a position to be ready to buy a home. So I don't just say you're not approved to move on. If you came to me, I'm going to be the one that's there to get you a home,
Exactly.
and we're going to work through it.
We
have a
literally
plan.
just had this scenario last week where somebody
Right.
reached out for a pre-approval, and unfortunately at the moment they can't get pre-approved, but you
Yep.
sent them an email back in full explanation, I mean in very detailed explanation of what happened, why they can't, and you provided them such value in giving them that credit person and what they're going to need to do to get their
Yep.
credit straightened out so that they can get pre-approved. And it's not going to be a long period of time as long as they focus their time, their energy, and everything on getting that straightened out.
Yeah. I think in 60, 90 days, they'll be in a position to do something. And that's pretty good. Some people feel
Yep.
like they have to wait years. It
No,
doesn't necessarily take that long. It just depends on what's on that credit history. And a lot of times there's things on there that they are unaware of or forgot about or didn't realize or thought they had it cleared up, but it
Yep.
wasn't cleared up. Well, sometimes you need a credit repair service to help you get that done and know
Yep.
that it's done right. So
And
uh,
even me as a real estate agent now, when I was younger, I needed credit repair. I think everybody, that have been in their 20s and things like that, kind of got crazy with credit cards or whatnot, and
right.
didn't really understand. So I don't think that people are bad people that have bad credit. You just you kind of just get out of hand sometimes, or
Right.
don't have that education, or whatever the case may be, or just feel frivolous. And so it doesn't mean you can't straighten it out and then get into a home. I have a beautiful
Right.
home. I am a real estate agent now. Like, it's possible and you will get it done. So anybody that's watching this and feels like, oh, my credit's bad and oh, I'm never going to get pre-approved, and it will happen for you. Stay focused, work hard, get with a credit repair company, and you will get there. Everybody does.
Absolutely.
All right.
You got
Thanks
it.
again, everyone, for watching. And if you want to subscribe to my channel or Mike Hawker's channel, you can find us in the link below. And we'll catch you later. Bye.
Thanks. See ya.